the radical. Fundamental principles of freedom, rational self-interest, and individual rights. This is the Yaron Brook Show.
All right, everybody, welcome to Yaron Brook Show on this Monday early afternoon. Hope everybody's having a great start to the week. Banks certainly are not. All right, so today we'll catch up on what's going on in the bank world. We'll talk about some Amazon's plans for drones, or difficulty plans for drones. We'll talk about the Alaska drilling, news from the Biden administration regarding that, and last night was Oscars night. I don't know if you guys were watching the Oscars, but last night was Oscar night, and we had a winner. Everything, Everywhere, All at Once basically swept all the major awards. So we will talk about that as well. All right, so we'll start with banks. So much of what I said yesterday indeed happened, but with very unsatisfying results. So they did not find a buyer for Silicon Valley Bank. They did find a buyer for Silicon Valley Bank in the UK. HSBC bought it. But they've not found a buyer for Silicon Valley Bank yesterday. What they did do is, in lieu of that, they basically guaranteed all the deposits at the bank, and made them available to everybody this morning. So that took off all the pressure from from depositors at the bank, from startups and the venture capital community. So basically, the venture capital community, the startup community is pretty happy today, I think, with the Biden administration, at least those of them who had accounts at Silicon Valley Bank. The government basically walked away from the $250,000 deposit insurance guarantee and basically said, no, all deposits are guaranteed, which is not surprising at all. It was expected they would do that. Of course, this just expands the notion that you can't lose your money in a bank, and that expands what's called the moral hazard risk, the idea that bankers can take on risk, and there's depositors shouldn't really concern themselves with that risk, shouldn't really be worried about the risk, shouldn't really be concerned about it because the government has their bank no matter what. So that is now, I think, pretty much official policy. In addition, yesterday, in something completely unexpected, the feds came in and it wasn't the feds, it was the New York bank regulators came in and shut down Signature Bank. And Signature Bank was a difficult bank. It also had quite a few unsecured deposits, but it was nowhere near the situation of Silicon Valley. Not clear exactly why they shut down Signature. I have to say that I think the main reason, at least that I can tell, for the shutdown of Signature was that they had a relationship with crypto. They weren't lending any money to crypto, so none of their assets were at risk in the crypto space, but they were depositing, they were taking in customers from the crypto community who were depositing money with them. There was, in a sense, a bank run on them on Thursday, Friday, but it would definitely look like over the weekend that had subsided. In spite of that, regulators felt the need to shut down the bank. A lot of investors lost a lot of money in that. I think it was completely unexpected. People didn't expect it. More than anything, I think it is a signal to crypto that the feds do not want mixing of crypto with banking. I think this is a long-term, very, very negative sign for the crypto space. Bitcoin has rallied on all this volatility and mayhem because, Bitcoin, in a sense, the argument has always been Bitcoin is not part of the crypto world. Bitcoin is the solution to everything. And but it's not just crypto. It's not just Bitcoin. Ethereum has rallied. A lot of the alternative crypto spaces have rallied. But the reality is that federal regulators are basically sending the message that they don't want to bank crypto-related businesses. They don't want to bank the industry, which is going to create real challenges for the space. It's going to create real challenges for crypto. At least the kind of the usefulness of crypto beyond Bitcoin as money, right? Any kind of application of crypto into the future, you can't really do much if you're not going to be banked. And I think that's a big part. They're calling this, and I did a show on this a while back, they're calling it a chokehold 2.0 from the attempt of the, chokehold 1.0 was the attempt of the Obama administration to shut down gun shops, payday loans, private universities, other businesses that they found unacceptable by putting pressure on the banks to not bank them. Well, the Biden administration looks like it's going to be quite successful in turning the banks against crypto. I think they already have. There was generally a statement about the fact that the government would protect depositors and the creation of a fund to protect those depositors, a claim that no taxpayer money would be used. This would be all funded by the banks themselves. Of course, this is untrue if the FDIC itself goes bankrupt and its fund gets depleted. If there are massive bailouts, then there's no question that taxpayers will be paying the bill. So it is a false promise premised on the fact that the promise itself would reduce bank runs. Unfortunately, whatever the regulators did over the weekend did not satisfy investors. Bank stocks got clobbered today. On average, they're down about 10%. And some banks are down a lot more than that. First Republic is down like 65%. And First Republic got capital from Chase and from the Feds. And in spite of that, the First Republic's got clobbered. So basically, the market is saying, we don't really trust the Feds. We don't believe them. We think people are going to take money out of the banking system and out of particular banks and move it to the too big to fail banks. We don't trust all the things that you've put in place. Biden this morning came out and gave this really terrible speech trying to reassure markets. I was watching the markets as he was talking, and it basically did nothing. No response. Usually when the president speaks, the market responds in one way or another, but he had no impact on the market. Nothing, zero, zilch. Because he basically said nothing. He reiterated what the Feds had done over the weekend. And then he basically said to hell with investors, to hell with shareholders. He literally said that's capitalism, as if the banking sector is a capitalist banking sector, as if the banking sector is a sector that is free in any kind of sense, the most heavily regulated sector in the economy. And yet, to hell with investors, this is capitalism. In capitalism, you lose money once in a while, even though all of this is set up, in a sense, by regulatory and government policies and central bank policies. So he went out to reassure the market, and he had no impact on the market. And, it's going to be interesting to see what happens. Bank stocks now are down 12% on average. It's going to be interesting to see what happens. It's going to be interesting to see whether the markets are going to be calmed by any of this. The actual reality is that, and again, I have a stake in the banking sector, so this is an area where I'm heavily invested. So take that with whatever caveat you want. Generally, the banking sector is healthy, well capitalized. There's so far no real problems on the loan side. Interest rates are coming down significantly. We'll get to that in a minute, which should bolster the investment in bonds that banks have made. Their value should go up. So these massive declines, in some sense, don't make any sense unless there is a massive run on the banks going on out there, and that is a real possibility. And ultimately, there are too many banks in the U.S., but the way to get us to a smaller number of banks is to allow consolidation and to facilitate consolidation on a massive scale, not to get everybody to withdraw all their money at once from the smaller banks and shift it to too big to fail banks. But we talked about that in great detail yesterday, so I don't want to repeat myself there. I will say, just from an economic, a macro perspective, what is really interesting this morning is the real decline, massive decline in bond prices. Some of the largest declines, one-day declines in bond prices that we've seen since the 1980s. Bond prices, remember, when interest rates go down, bond prices go up. And this explains why generally the stock market is up right now, because bond prices are down. It's not up a lot, but it's up a little bit. And what's holding up the stock prices, which it shouldn't, right? If you think about it, if banks are imploding, there's every reason to believe the rest of the economy is in trouble. There's every reason to believe that the NASDAQ, the S&P 500 should be going down. But it's not going down, and the reason it's not going down is because bond yields are going down so significantly. Just a few days ago, the 10-year bond had a yield of 4%. Right now, the 10-year bond is yielding 3.5%. That is a massive drop in yield, and it means that the price of this bond has gone up dramatically, which actually bolsters the investment portfolio of all these banks. These banks are making money as the yields drop. The banks are making money on the investment portfolios, which was a big problem for Silicon Valley Bank because interest rates went down. Interest rates went up. Prices of bonds went down, and they had to sell their investments at a loss. So this is bolstering that. It doesn't matter. In spite of that, banks are taking a significant hit. The 2-year bond is way down. Yields on the 2-year bond is way down. The projections in terms of what the Fed is going to do are also down. So now the market is estimating that the Fed will either not increase at all or increase at 25 basis points later this week. The previous estimates were that the Fed were going to increase by 50 basis points. It's interesting what implication all this has for CPI, for consumer inflation, which is what, if you will, the Fed is monitoring. Is this decline in bank valuations, bank stocks, suppressive of inflation? It could be. And if it is, then the Fed might consider stopping raising interest rates, and that would be good for the rest of the stock market. The yield curve is super inverted, which suggests a recession just around the corner. I still think we're heading towards a recession. I think the market movements and what's happening in bank is just suggestive of that even more so. The inverted yield curve, the massive decline in interest rates right now, which is continuing as we speak, none of this is good. None of this is good. Your bank losing value is not good. Interest rates in this environment plummeting suggest investors think things are going to get bad. And who knows what inflation is going to be. But the likelihood of recession seems to increase every single day as we observe what is going on in the world here. And the question is, of course, going to be ultimately, how bad is the recession going to be, right? How devastating is it going to be? And I have no idea. We'll have to wait. We'll have to wait and see, and let this play out and see what happens. But right now, there's still panic in the streets. There's blood in the streets, as Buffett likes to say. This is and certainly in bank stocks, and all other sectors seem to be holding up quite well. And as I said, everything is up. Gold is up, platinum is up. The dollar is up versus some currencies, even though interest rates are way down, would just suggest that there are going to be problems elsewhere as well. It doesn't really make any sense to me for the dollar to be up versus the euro, unless there's spillover effects onto Europe. The dollar's also up vis-a-vis, I think, the pound sterling. Let's see. The yen and the dollar's up versus the yen in spite of interest rates going down. I'm not sure I understand why that is. And Bitcoin through the roof. Bitcoin is up in the last 24 hours 16%. We'll see how long that lasts. The crypto 200 index is up 6%. So there seems to be a flight to crypto quality, if you will. People were really upset at me for saying something like Bitcoin, equating Bitcoin to crypto. And you're not supposed to do that. They're two completely different things, So anyway, I apologize to all of you who are offended by that. All right, let's see. Let's see, what else do we... Yeah, so the big suspense right now, and I think the big fear right now, and this is the challenge with shutting down Signature yesterday without really good explanation for it, is everybody is kind of trying to guess who the next bank to shut down is. I think that explains the big movement in certain names. So there's a lot of people sitting on the sideline, investors basically trying to guess what the feds are thinking and what the bank regulators are thinking in terms of which banks are going to shut down next. So there's a bunch of banks that are down well over 20%, and a few banks that are down more than 50%. Anyway, we'll just have to wait it out from here and see how the market evolves and how regulators respond. So far, no bank closures today. So far, right? Yesterday they closed Signature after my show, so who knows what will happen after. All right, happy to take any questions you guys might have on the situation in the markets generally, economy generally. Happy to answer any of those questions using the super chat. Just a reminder, we do have goals to achieve in these shows. This is how we fund the Yaron Brook Show. Particularly these news roundups. It's $250 a show, so they do need to be funded. Otherwise, they will. I'll have to change strategies. We do have a lot of people relative to a news roundup watching right now, so probably a lot of people who don't usually watch. You can support the show value for value by using the super chat button under there. Or by using the sticker button. You can ask a question, or you can just show your support by contributing some money. And I really appreciate that, and you guys keep the show alive. We typically make the $250 goal, and that's why the show keeps going. All right. Yeah, this is a kind of another story about the cost of regulation. So one of the dreams Amazon has, and has had for a long time, Jeff Bezos articulated this 10 years ago, was that ultimately what they would like is to be able to deliver your packages to your doorstep using drones. So the drone technology exists. Drones are powerful enough, certainly today, they weren't 10 years ago, but Bezos could project into the future and see that they were going to be. But drones are powerful enough to be able to take a lot of the packages that we all get and basically airlift them from some kind of regional warehouse to your doorstep. And you might have to pay extra for that service, but for certain things like medications and certain things that you want urgently, you could get same-day delivery by drone. And of course, drones don't have to deal with traffic. They're pretty cheap to run. They are challenging because they can probably only do one packet at a time, so they're not incredibly efficient, so you would have to pay for it. But they would provide this amazing additional service, and that again, could improve our standard of living, quality of life pretty substantially if we could just get the stuff that we need whenever we need it at basically very little cost. The drones shouldn't really interfere with commercial flights. They fly pretty low. So it's not clear that there is, but of course the FAA, Federal Aviation Agency, is responsible for regulating drone technologies, and Amazon has been trying to get the FAA to approve their ability to do something called Prime Air, which would deliver packages within hours or within 30 minutes, actually, from the time you ordered them immediately to people, right? But in order to get approval from the FAA, Amazon has to run several hundreds of hours of flying without any incident, and they have to provide all that data to the FAA. The FAA then has to analyze it, review it, decide if they approve it or not. So Amazon has the technological challenge that they have, of designing the drones, building the drones, making sure the drones are big enough, safe enough, can carry these packages, have the distance, can carry them for far enough and get back, and all of that. Then it has the technological challenge. It also has a logistic challenge. The logistic challenge is a real challenge. How do I actually get these drones to be commercially viable, and which warehouses does it make sense for, which customers does it make sense for, which products does it make sense for, can do things that are too heavy, and so on. So Amazon has to focus on the logistics, which are not easy. And then, of course, it has to deal with the regulatory issues of getting regulatory permission. In order to do that, they have to solve the first two problems, and what they're doing right now is they're running two test locations, one in Lockford, California, and one in, I don't know where the other one is. It doesn't say here. It just says two test locations in Lockford, California. So maybe they're both in California. Maybe they're both in this area in California. I thought the other one was like in Texas or something. I think it is. I think that's a typo in the article. Anyway, so there. Yes, the other one is College Station. This is the home of Texas A&M. The other one is College Station in Texas. And both of them are, pretty small locations. Lockford, California is home to about 3,500 people, so they're testing out on small. They're doing this, of course, again, not easy to do, but they're accumulating the data. There being a lot of delays in terms of what the FAA exactly wants and what they can do, and regulation. So far, Prime Air has signed up about 1,400 customers for services between the two sites. Because these locations are small, it's hard to get customers. It's not clear that these are the ideal people for this. So Amazon has subsidized the service. They've been giving customers gift cards and all kinds of other stuff to get them excited about this. And, supposedly within the next few weeks, they will be providing the FAA with all this data, and then they'll sit and wait for the FAA to decide whether we get an improved service with air. I mean, just imagine these kind of issues. I don't know, flying cars. I've seen a number of companies working on flying cars, but just a number of different products that are out there, a number of services, a number of things that could be improving our lives that are stuck, not for any development reason, not because of lack of technology, not because of lack of capital, not because of lack of ability or customers, but just because they're waiting for the regulators, sitting and waiting for the regulators, waiting for permission. One of the ways to think about capitalism is a permissionless society. You don't wait for permission. You don't ask for permission. You do. And one of the signs we don't live in a capitalist society is you need permission for everything. If you're an entrepreneur in so many fields, certainly in the banking space, you need permission for everything. Okay, I guess some good news. The Biden administration today approved a big drilling project in Alaska, of all places. Alaska is super contentious always because of environmental concerns. This is in the. It's in a region called the Willow Oil Project in Alaska. It's potentially a very large source of fossil fuels of oil. You know, the environmentalists are flipping out. This goes against Biden's commitment to crush the oil industry, and this is a real and significant expansion of that oil industry. And now, in order to approve this, Biden had to throw the environmentalists some stuff. So basically, he said, "Okay, I'm banning oil production in all these other areas in Alaska, and I'm reducing, and I'm not going to approve any licenses in all these other areas, but this I'm approving." And then the other thing is, in this Willow oil field, he's only approving the pumping of oil up to a certain minimum, max amount, an amount that is high enough to make it worthwhile for the oil companies to actually pump, to actually go in and make the investment and produce the oil. But the oil field has a much higher potential. So they could be pumping a lot more on a daily basis. So it's stupid because over the lifetime, they'll pump exactly the same. But anyway, this is just typical trying to find ways to be able to tell his base that, no, I haven't completely flip-flopped. No, I haven't sold you down. No, I'm still committed to environmentalism and to crushing the fossil fuel industry. But what Biden has realized is that, just a straightforward realization from the oil crisis since the Russian war, is that America better produce more oil because it cannot rely on the rest of the world. And, oil is going to fluctuate dramatically. And given that we in the United States have vast resources still of undeveloped oil, undeveloped natural gas, we better drill. Was it drill, baby, drill? So as to not be not just reliant on the Middle East, but now also reliant on Russia and demand from China. So I think even the Biden realized this and he approved this. So good. This is a good move by the Biden administration. One of the few good moves that they have made. All right. Again. We'll see the impact this has longer term. And of course, if you really want to understand everything that's going on in the energy industry, the person I recommend is Alex Epstein. All right, let's see. Finally, let's talk briefly about the Oscars. Of all the Oscar movies that were up there, I think I've only seen 2 or 3, but I have seen the winner. The movie that won all the prizes, Everything, Everywhere, All at Once. And it is pretty amazing to me that this movie won basically everything. Maybe it shouldn't be, but it is pretty amazing to me, at least. I don't know how many of you guys have seen it. It's a very strange movie. It's a very weird movie. It's not a movie that you can actually follow. It's not a movie that really has a plot. It's certainly not an intelligent plot. It has an unintelligible plot. It's not a plot. Unintelligible actions happen that are completely random. It ultimately has a message that is corny and uninteresting and false, of course, about the importance of family and the importance of looking at the positive things in life and focusing on the positives and, loving your life in spite of the fact that it maybe sucks and not worrying too much and, things are going to be okay, embrace of mediocrity. Embrace of mediocrity and an acceptance of ordinary life. It was a action, crazy, sci-fi, but at the end of the day, make zero sense. Kind of movie that takes the multiverse, kind of the idea of a multiverse that people talk about out there, to crazy places, but plays with it. I guess plays with the idea of the multiverse. Maybe showing the absurdity of it, but I don't think that's the intention. I think it takes itself too seriously in terms of the multiverse. Anyway, I didn't particularly like it. I didn't hate it, but I can't say. Yeah, I didn't like it at all. There was no real virtue. I mean, the acting was good. Jamie Lee Curtis plays this monstrous character. She does a good job, and I guess she won the Oscar. The main actress was very good in it. She has to switch and she has to do all kinds of dramatic things. So yeah, I mean, I get why she would get the Oscar. So she was quite good. The movie as a whole, I didn't think made a lot of sense or added up too much. And it's a little weird. It strikes me as more of a teenage movie, a crazy teenage movie. It is a little surprising that the Oscars and the Academy was so enthused by this movie. The movie's called Everything, Everywhere, All at Once, and it won, 7 awards last night. Best Picture, I think maybe Best Director, Best Actor, Best Supporting Actress, Best Actress, Best Supporting Actress. Didn't win Best Actor, and maybe Best Supporting Actor. I don't know, but pretty amazing sweep of the Oscars. So quite impressive, and yet not a particularly, for me at least, not a particularly likable movie at all. All right. What else do we want to talk about? Well, I think it's time for our. I think it's time for our super chats. Let's see what we have. All right, so we're about halfway to our goal. So I'd appreciate it if you guys would consider helping us get to the goal. Right now, like everybody putting in a couple of dollars would get us there. Some of you putting in $5 would, a bunch of you putting in $5 would definitely get us there. Let's see, Carolina, thank you, and David, thank you, and Ryan, thank you, and friend Harper, thank you, and Robert, thank you, and Kenny, thank you, and Gail, thank you. All of you guys contributed without asking a question, so thanks for that. If we get a bunch of other people doing that, we should be able to make the goal. And of course, if somebody wants to come in with $130 and get us there all at once, that would be terrific, and greatly appreciated. So. That is good. Ian says he donated today, but he couldn't get the money out of the bank. I think everybody's getting their money out of the bank right now, in spite of what is going on. But it is pretty scary out there, I have to admit. All right, let's see. Shazbot says, why would having 2 oil fields producing a small amount be better than 1 oil field producing a large amount from the environmentalist perspective? Well, because if you're producing it's not about 2 oil fields producing a small amount. It's about 1 oil field producing a small amount, right? So what they want is that every year small amounts are produced. That makes it possible in the future for them to shut them down. That makes it possible for them to pretend to the environmentalists that it isn't that big of a deal. But there is no fundamental difference. It's just playing games with the numbers. And it's just Biden making this decision and then trying to appease the environmentalist left as much as they can, as much as he can. So it really is, the whole thing is senseless, is completely senseless. All right. Let's see, what else do we have? I'm just reading news about banks, sorry. it's hard to focus these days. Themaster, under capitalism, would Amazon still have to pass a safety test before they're allowed to use drones as they are flying dangerous transportation over people? I don't think so. I mean, unless there was a real reason to think that there was flaws in it, I mean, I think the solution would be the ability to sue Amazon up the wazoo if an accident happened. So unless you had a reason to believe that there was a real threat involved in these drones, that Amazon was doing something, cutting corners, doing something that could represent a real threat, you can't assume somebody's guilty. You have to assume innocent before proven guilty, or before there is reasonable fear, reasonable reason to think that what they are doing is putting you in danger. So I think I gave the example, you're walking through by a construction zone, the crane is like tilted this way. Then you can call the police and say, look, that crane looks like it's putting us in danger. Could you please go and check it out? And they would send in inspectors and check it out and so on. Or if you saw, something going wild. Now, there's some risks, maybe nuclear power risks, that you could, without regulations, but with some regulations, but not the kind of regulations we have today. For example, you could say, if you're building a nuclear power plant, you have to buy insurance. And the insurance company, then you assume the insurance company would regulate them, right? Because the insurance company wouldn't want to take the massive losses that would be entailed in a nuclear accident. The same is true of certain other risky activities. You could require insurance as a way of getting around having the FAA make the insurance companies figure out what the best way to provide product safety. In general, I believe that in a truly free market, insurance becomes much, much more important than it is today. You know, you buy insurance against poverty, you buy insurance against all kinds of disasters and all kinds of threats and risks as an individual, as a company. So that insurance plays a big role replacing government regulatory agencies, replacing even elements within the welfare state. All right. Okay, we're still about $108 short, guys. There's still people out there who value for value. Trade with me, guys. Trade with me. You're getting a value, trade a value back. Doesn't cost you much, $5. All right, Louis Philip Noel asks, what is the best argument we can use to support oil exploration and production to counter the left-wing and green opposition? I mean, that's easy. Read Alex Epstein's Fossil Future, or more case for Fossil Fuel, but Fossil Future is even better. That lays out, and go to his website where he has talking points on this. Just look up Fossil Future. He basically has made a career out of figuring out how to make great arguments in support of oil exploration, in support of fossil fuels, and in opposition to the kind of hysteria and pathetic nature of the critics of the environmentalists arguing against it. In short, human life depends on fossil fuels right now. Human civilization, human flourishing, human success, and anything, including if it's a value reducing CO2, depends on the use of fossil fuels, because our life depends on fossil fuels right now. And that is ultimately the best argument we can use to support oil exploration. Human life depends on it. Human life depends on it. All right, we need another, I don't know, 15, 20 people to do $5 each, like Eddie just did. Thank you, P. Eddie. Thank you, David. Thank you, Jeffrey. Thank you, Adam. Thank you, Vladimir. Thank you, John. Thank you, Themaster. Thank you, David. See, people are responding to my request. I really, really appreciate that. And there's still more of you that could be responding and getting us. We're $87 short, so we could be there. It's definitely achievable. All right. Thank you, Louis Philip. Robert says, YBS Fans, since the Academy Awards included nonfiction, best documentary, let's campaign to get the Yaron Brook Show a well-deserved Oscar. Yeah, I think I should get an Oscar, absolutely. Bonnie says, to someone who understands none of this, me, it sounds like the government owns the banking industry since they control it. What do you think? I mean, as I said yesterday, the banking system is a private-public partnership. It is a partnership between the government and shareholders and the private sector. There are aspects about a day-to-day management of the banking sector that are left to private managers to make decisions about. You know, the valuation of banks is set in a market in which individuals trade, they buy and sell, but it is heavily regulated, heavily controlled. There's only very little scope in which managers can move in terms of what kind of products they can offer, what kind of loans they can offer, what kind of investments they can make. And then, of course, there's deposit insurance, and then there's the potential for that deposit insurance to expand or contract or apply to some banks and not to other banks. And then there's the possibility of the bank just shutting you down, the government just shutting you down, you know, whether justifiably or in some cases not justifiably. During the S&L crisis in the early 1990s, the FDIC shut down a bunch of banks that shareholders claimed were not bankrupt, and they had no right to shut them down, and basically shareholders were wiped out. And shareholders ultimately sued, and they sued in court, and it took about 10 years, but after about 10 years, the courts basically ruled that the shareholders were right, that the FDIC was wrong to shut down the bank, that the banks were not bankrupt, and that the FDIC needed to pay shareholders compensation, and they did. I don't know the answer to this, but I wonder if Dodd-Frank has given more power to regulators to shut down banks at their own discretion without being exposed to liability to shareholders in case of a lawsuit. I don't know the answer to that, but I wonder if that is the case. Because otherwise, I wouldn't be surprised if there was some opposition in the case of Signature to what happened yesterday. But anyway, you know, we live in a mixed economy. There's no free market. Banking is not a free industry where you can say, oh, you free market advocates, you should advocate for X. What do I advocate for? Get the government out of banking. That's what a free market advocate would say. But how to deal with a particular banking crisis? There is no right answer, because there is no market. It's a mishmash. It's a mixed economy. And there is no one free market answer. Let the banks fail. Oh, no, bail them out. There's no answer to this, because there is no, and this is not pragmatism. I know I've been accused because of yesterday's show of pragmatism. It isn't pragmatism. This is just the reality. There's no marketplace here. There's no who you penalizing. What are you penalizing? What is the market? Where are the pricing signals? What is the market supposed to learn from this? What is the moral status of all of this? It's all up in the air because, again, as Bonnie says, banks, to a large extent, are a government, you know, run subsidiary type thing. All right, Richard. Good to see you, Richard. Richard's come in with some $20 questions to help us reach our goals, and so you know we're much closer to that goal right now. Richard says, "Hello, Yaron. I want to alert you and your listeners that hit and run accidents are rising rapidly in California." Interesting. Be very careful. My girlfriend and I were victims of one last week, but we're okay. Well, that's good. Her car is not very immoral to do this. So somebody hit your car and then ran off. God. I mean, that's just insane. I mean, hopefully you got their license plate number or something, but I'm going to do a show about this. I was going to do a show about this on Saturday. I'll do it maybe later this week. I want to do a show on trust and what's happening to trust, because it's interesting. I'll look up the statistics about hit and run accidents. But the other thing that's happening all over the country, but particularly in California, but really all over the country, is that shoplifting is up significantly. And this somewhat has to do with the fact that in some places it's not being prosecuted, but it's also got to do with the disappearance of trust and the disappearance of respect for property rights, which is so American that you know, shoplifting was, I think, far less of a problem in this country because of that deep respect for business and property, and that is going away. It's scary. It's scary. So I will do a show on kind of all of that. Richard says, in a free market, do you think that there would be more overlap between banking and insurance? It seems like the regulatory restrictions on banks versus insurance are quite arbitrary. Yes, I mean, it used to be that they were completely separated. They have been combined, but then there are all kind of walls that have been created. I mean, look, the reality is this. Banking, insurance, finance, money is so regulated and controlled, that we really have no idea what it would look like in a free market. I mean, I can speculate. I can tell you how I imagine it could look like. But we don't know what it would look like in a free market because of how controlled and regulated it is. Who knows what kind of new structure would evolve, what kind of financial combinations would be created, what kind of instruments would be resolved to deal with bank runs. I think the way to deal with bank runs would primarily be certain banks would be 100% reserve banks, and those who didn't want to be susceptible to a bank run would just deposit their bank in a 100% reserve bank. Free markets would just give you options. One of the things that regulation does is it gives one size fit all. And it's boring and it doesn't change. We have too many banks in the United States. They're not geographically diverse enough. They're not diverse generally enough. So they're highly susceptible to bank runs. They're highly susceptible to bank runs in particular geographic areas and particularly industries. And this is exactly the kind of issues that in a free market, the market would resolve, that the market knows how to resolve, that markets are very good at resolving, and the kind of issues that in a regulated environment you just can't solve. All right, Richard, also, we were unfortunately not able to get the license plate. Very sad and pathetic that we need to get dash cams. I would support, dash cams are very prevalent in other countries exactly because of this. I would support government installing cams everywhere if they were used to enforce hit and runs rather than speeding. Well, the problem is once you have cameras everywhere, they'll be enforced to just monitor everything that you do, Richard, and everything that the government wants you to do. That's the sad reality. So no, we don't want cameras everywhere. We really don't. But dash cams make sense. I know a lot of people in California installing dash cams, and I think if you go around the world, a lot of people have dash cams, particularly in Eastern Europe, in places where trust is low. Everybody has a dash cam, front and back. Richard says, I look forward to your show about trust. The internet really needs it based on objective reality. Yeah, everybody really needs it. Josh says, sorry if you mentioned already, any thoughts or details relating to large exposure limit rule of the banks? How does that affect the largest bank? Does that limit their ability to accept new deposits at some point? Yes. I mean, there are 4 large banks basically that are too big to fail. I mean, I think a lot of banks are too big to fail. Obviously, we just saw that all depositors were covered at the 16th largest bank, and really at Signature as well, which is way down there. So at the end of the day, the 4 largest banks, I think at least 2 of them, maybe all of them, are very close to the deposit limit. They're very close to 10%, where they're not allowed to take more than 10% of national deposits. Now, the government can waive that temporarily, and they have during the financial crisis. They waived it, allowed Bank of America to go over 10%, but then expected them to shrink deposits over time and go back to the 10%. But look, it's difficult to open an account today because of regulations. You can't just open it in minutes. It takes a few days. At some point, Bank of America and Chase are going to say, we can't take any more deposits unless the government authorizes us to take more deposits. It is a problem. If you were switching your accounts right now and you encountered a problem regarding this, I would look at the next level of banks, Truist being one of them, the former BB&T. But I would definitely, if you're moving your money, move it into a top 10 bank. Don't move it to another small bank. If you're worried about this, and I don't want to create a bank run, and I don't think you should be worried because deposits are all secured. And I think that the government is committed to bailing everybody out. So I wouldn't worry. But if you were worried, and this is what people I think are doing, and this is what the fear is that people are doing. You've got to move your bank into one of the top 10 banks in the country, not into another small bank. And that's the fear that that's what people will do. And that's why you're seeing, so many banks taking massive hits to their valuations. Thanks, Josh. All right, thank you guys. We've exceeded our goal, so appreciate it. We're over $300. Enric says, can these bank problems affect investment businesses like Fidelity, Schwab, and other such significantly? Yes. This is why Schwab stock was down 23%. 23% this morning. Because it can affect them, because if the investment business has deposit accounts, then they are susceptible to a run, just like everybody else. I don't know. I don't think Fidelity offers basically bank accounts, but Schwab does. And Schwab I think they recovered later in the morning, but at least it opened. I haven't been following Schwab. They opened down 23%, which means massive decline. That's a quarter of their value was wiped out. So yes, the market is saying absolutely some of these investment businesses have exposure. Peter says, what implications are there for wealth management, i.e. Lombard loans in current climate pertaining to interest rates and banking more generally? Well, interest rates seem to be coming down, at least in the short run. That, of course, affects whatever investments you're doing and how you should be investing. To the extent that you're invested, you invested in banks, it's a challenge. The other thing is you have to estimate, is there a recession coming? If there is a recession, which loans are safe and which loans are not safe? What kind of investments are going to make sense? The S&P and the Dow and the NASDAQ are up. The NASDAQ's up almost 1% today, which in my view is nuts. I understand why it's up. It's up because interest rates are down. But every indication now is that we're heading towards a recession and it's going to be a bad one. So why the NASDAQ is doing well, given that, again, it's all about interest rates. So people are weighing all this, and that has a huge impact on investment management. Again, I don't give investment advice. Just to remind everybody, nothing I say is investment advice. Anonymous user says, did you see Alex Epstein talk with the Senate? I saw bits of it. Alex is excellent. Big fan of Alex's work. So, yeah, it's great. Emmett says, can you recommend on Alex Epstein's appearance before the SBR committee and how the Dems attacked him? Yeah, I'm not surprised. Ad hominem attacks, attempts to disqualify him. Don't deal with the actual content of what he's saying. Don't deal with that with his actual arguments. That is typical, and that is typical, and that is, that's what we saw, and not surprising. Alex handled it beautifully. Paul says, what do you think about the following Nassim Taleb's idea? If a company will ever accept bailout money, then the CEO of that company will be paid as a public employee. If not, it will pay the CEO as usual. I don't know what that even means. What is bailout? Who's being bailed out? Is the shareholders being bailed out? Is it debt holders being bailed out? Is it depositors being bailed out? If, for example, Silicon Valley Bank, the CEO is fired. It's not that he didn't, and the new CEO is a government guy. But some bank is going to buy ultimately the assets of Silicon Valley Bank, and it might be subsidized, gets a little bit of subsidy from the government. Will that CEO then have to be paid like a government employee? And if he does, will any bank want to buy these assets? No. Will anybody want to work as a bank CEO, particularly a risky bank? No. So it's a silly, stupid, kind of gimmicky attempt to be clever. Nassim knows better than that. These things can't work. And you have to define what a bailout money is. What does it mean? Is any, if you give one of the auto companies bailout money, as Reagan did and as Obama did, do you then, is a government employee going to run the auto industry? And what kind of CEO are you going to get if that's the case? And are there consequences to everybody else? Maybe it's just better not to bail them out. The solution is capitalism. which means the separation of state from economics, which means getting out of the way. Simon, did what happened on Friday until today change your view about investing more in gold? Not really. I mean, I just don't see, again, if you think the gold is a hedge against the end of the world, I'm still not convinced about the end of the world coming. Gold is up 2.63% today. It's up to 1,900. Okay. I mean, I don't, if you don't believe in the end of the world, 10% of the portfolio could be in gold. If you do believe in the end of the world, put more in that. So this hasn't changed my estimate about the end of the world or my estimate about the value of gold. It hasn't proven itself to be an inflation hedge. Adam, I'm envisioning a free bank that essentially matches the gold of depositors with borrowers for all durations. This does away with duration risk, and the bank can take a small spread for expenses. Yes, I mean that is 100% reserve, 100% reserve bank, and that's what. I think the market would offer some banks like that. And if you wanted to take a little bit more risk with your deposits and maybe get interest on them, then you would allow for fractional reserve banking. So fractional reserve banking would be one option among many, among several, within a free banking system, right? Some banks would offer fractional reserve, some banks would not. Those who offer fractional reserve would offer different levels of fractional. They'd have to disclose those. And you would decide, and the more interest the bank paid you on your deposits, that would probably mean the more risky it actually was. Richard says, I also look forward to the show on trust. I will keep an eye out for that one. Thank you, Richard. Jeffrey says, this is why I spend all my money. That's right. If you don't save any money, you don't have to worry about these things. Josh says, do you know where I can find an article showing how close banks are to their exposure limits? No, I don't know, but my guess is that if you Google that, you will probably find it. Google something like percent U.S. deposits at banks or something like that. But I don't know of a particular article to do that. All right, thank you all. Thank you for funding the show. We raised $324. That's great. Thank you for all the questions. Really appreciate those. Again, I hope you get value out of these shows. If you do, you can support the show on Patreon, on Subscribestar, or on yaronbrookshow.com/support, or you can just do it on Venmo or PayPal. But any one of those, you can set up a monthly way of supporting the show, which is my preferred way, because that way I know what is coming and it's predictable and it's incredibly helpful. So thank you to all my supporters. Really, really appreciate it. I will see you all tomorrow morning for another Roundup. And I think tomorrow night is interview night, and I'm interviewing Peter Schwartz. So that'll be fun and interesting. So we'll have Peter Schwartz on to talk about altruism, to talk about whether there's such a thing as systemic racism in America today, and many other topics. So look forward to you guys joining me tomorrow with Peter Schwartz. Bye, everybody.